morning. It's Friday the 2nd of February here in London. This is the Bloomberg Daybreak Europe podcast. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, Apple's China slump deepens despite reporting stronger sales elsewhere.
Meta and Amazon rake in bumper profits as they slash costs.
Plus, following the Fed's lead, but at a slower pace, the Bank of England's Andrew Bailey offers a note of caution on how fast rates will come down.
Let's start with a roundup of our top stories.
Apple's latest quarterly results triggered investor fears that the company is losing clout in China, a market that generates roughly a fifth of its sales. Revenue from the region plunged by 13% last quarter, even as the iPhone maker returned to revenue growth with a beat on expectations. Bloomberg's Emily Chang has been speaking to those at the top of the company.
I did just speak with Apple CFO Luca Maestri. He said, we're not happy with it, but we know that China is the most competitive market in the world, and we do still see a lot of long-term opportunity there. He did call out that the iPhone declined less than the other product categories. That is, the iPhone did better than the other product categories in China. He said that they saw a record install base. They're still seeing strong growth in upgraders. But again, this is a market that folks have been very concerned about.
As Emily Chang alluded to there, Apple is contending with cooling consumer spending in China and widening government bans of foreign technology. The struggles overshadowed an overall revenue gain of 2.1% to just under $120 billion at the world's most valuable listed company.
Meanwhile, Meta has reported strong fourth quarter results with a 25% gain in sales and profits that tripled. The social media giant also announced plans to buy back an additional $50 billion in shares and issue its first ever quarterly dividend. Bloomberg Intelligence's senior analyst Mandeep Singh says that the signs are good, but that there are still concerns.
Meta monetizes at a much higher rate because their targeting is better and they have better systems. It's reflected in the numbers, but I do think, you have to think about user growth and engagement, and that's where the Blue app declining is still a concern. But for now, I guess people don't care because they grew 25%.
Mandeep Singh referring there to the fact that shares in Meta jumped by more than 14% in extended trading. After seeing business shrink for the first time 2 years ago, CEO Mark Zuckerberg made efforts to turn around the company. He famously dubbed 2023 the year of efficiency and cut thousands of jobs in the process.
Elsewhere, Amazon's focus on cost-cutting also helped it to report strong quarterly results. Fourth quarter revenue increased by 14% to $170 billion, jumping nearly twice as quickly as expenses. The consumer giant laid off more than 35,000 people last year in a bid to improve profits. The positive results from Meta and Amazon sent their stock prices soaring by a combined $270 billion in after-hours trading. The positive vote from investors validating belt-tightening strategies that have come to define the tech industry's past 16 months.
The Bank of England is on the path to rate cuts, but some hesitation remains. Andrew Bailey told Bloomberg that factors including Middle East turmoil and rising living standards could be inflationary. The Bank of England governor also made it clear that policymakers aren't ready to say when cuts will come.
We have included a risk, by the way, a new risk actually, which is really reflecting obviously sort of tragic events in the Middle East and the impact that can have through the Red Sea effects. So I think now the question is, for us, is for how long do we need to maintain this stance going forwards? As I've said a number of times, we're not making predictions at this point.
Bailey's comments come as the Monetary Policy Committee saw its first member voting to cut rates since the pandemic. Investors are still betting that the central bank will reduce its key rate by a full percentage point this year, starting in June.
Shares in New York Community Bancorp slumped for a second day over fears of its exposure to the commercial property sector. The stock closed at its lowest level since 2000 after falling by 11% on Thursday. Downgrades of the bank are mounting. Moody's has put the lender on review for a credit rating cut. The sell-off in NYCB shares began after it's cut its dividend on Wednesday, posted a quarterly loss and ramped up loan loss provisions. Bad loans tied to US property have also hit banks elsewhere. The Japanese lender Aozora lost a third of its value in 2 days after warning of its first loss in 15 years over the issue.
President Biden's administration is making its intention to respond to the death of US troops clear. The news comes after 3 American soldiers were killed last week by Iranian proxies in Jordan. Defense Secretary Lloyd Austin says that his forces have a number of options at their disposal.
I would just tell you that, we will have a multi-tiered response. And again, we have the ability to respond a number of times depending on what the situation is.
Lloyd Austin's comments come as US officials push back on speculation that the US has approved plans for strikes in Iraq and Syria. National Security Council spokesman John Kirby called the talk irresponsible. Now, in a moment, we'll be diving into a big week for tech earnings with our colleague Kriti Gupta and also bringing you Bloomberg's interview with the Bank of England Governor Andrew Bailey. But first, how about a little bit of sports news?
High-octane sports news.
Very high. Lewis Hamilton leaving Mercedes for Ferrari.
Yeah, I mean, look, it's an absolutely huge move that he's going to move at the end of the 2024 season, according to announcements from both teams on Friday. So it's a release option that was in his Mercedes contract that he's going to exercise now. And Ferrari said he's going to be joining on a multi-year contract starting in 2025. He's going to race alongside, of course, Charles Leclerc.
Yeah, and you just wonder when Lewis Hamilton is going to become the kind of mega brand that you sort of think he's bound to become. It's still focused on...
Is he not already? Does it already count as a mega brand?
He is, but I would have thought that he could get bigger, surely, and become, Taylor Swift billionaire status perhaps awaits, maybe.
Yeah, interesting to see that his comments from the end of the 2023 season saying that, he didn't believe that, it didn't seem to be certain that a Mercedes could challenge Red Bull when it came to dominating F1, talking about them having a North Star to follow. So it'll be interesting to see how that pans out for him at Mercedes.
Yeah, absolutely. OK, let's dive into the tech earnings, shall we? Apple seemed to reign on a parade of otherwise pretty positive tech earnings. Its stock slipping 3% post-market after weak sales in China, which overshadowed better than expected iPhone sales. Meta and Amazon, though, meanwhile, soared after beating expectations in their latest quarterly results. Joining us now to discuss, Bloomberg TV anchor Kriti Gupta with us for more. Good morning. So a sales beat from Apple, but a slowdown in China, and that seemed to leave something of a bitter aftertaste for analysts.
Well, this has been a story that we've looked at for a couple of quarters now, that China has kind of been the weak spot. And I think the context is important here in that whereas we all know of Apple and the iPhone as kind of the go-to phone, that is not the case in the EM world. Samsung has really been the outperformer there. And China absolutely has been pushing the Huawei story as well. So there have been regulatory concerns around the iPhone. We've known this for a while because China and India, by the way, have been the growth market for Apple, but also tied to their supply chains that Tim Cook had then moved from China to India. That is a story that comes with a lot of criticism, because if you can't tap into a market of about 1.3 billion people, then how are you able to grow by the same margin you've grown in the last 10 years? That's been the concern. But this earnings report really shows that, well, actually, you can do that in a really big way. And I think from a more macro perspective, it highlights the fact that people are still buying new iPhones. They are still having these sales beats for the company itself. And I think it speaks to disposable income as well. Apple's one of my favorite stocks because yes, you view it as kind of this iPhone sales story. You can look at it as a supply chain story. You can also look at it as a consumer kind of foot traffic story as well. 30% of the revenue just comes from Genius Bar fixes. So if you go in and say, my AirPods aren't working or my screen is cracked or whatever that may be, and the Genius Bar charges you for Apple Care or whatever that may be, that's 30% of Apple's revenue right there. It's just repairs on their products. So that in itself speaks to the fact that the consumer is, one, spending that money, two, engaging with it. They're actually going into the stores, making those repairs, and three, that you can kind of still have this tech growth story without China. Yeah,
and a really interesting one to monitor as well from here too. Turning to Meta though next, Kriti. So a stock buyback, first ever dividend. This is a bit of a shift for Meta.
The first ever dividend is what's catching my eye. And just to very quickly broaden it out, have you noticed in the last, I want to say 6 months or so, how many companies around the world are now issuing dividends? And it's really to keep shareholders kind of attached to their stock. It's like a little bit of a sweetener. Ryanair, for example, in the last quarter did it for the very first time, 400 million euros, I believe. Obviously, two very different stories. Let's go back to Meta. Mark Zuckerberg started off 2023 saying 2023 was going to be the year of cost efficiency. And everyone kind of scoffed at him because he was kind of the big mover behind the metaverse is the next new thing. Is it the next new thing? It doesn't really seem that way at the moment, but it was enough for Mark Zuckerberg to kind of have this roller coaster on the stock ride. The fact that he has actually delivered on that is a pretty big deal. I mean, for Meta, a lot of their revenue comes from advertising in particular. So they have a similar story to Alphabet, but they're not as diversified as Alphabet. I mean, they have WhatsApp under the group, they have Instagram, but at its core, it is still ad spend. So the fact that, again, bringing it back to the consumer, bringing it back to business investment. They're saying not only is the consumer strong, but businesses are so confident that they're strong that ad spend is where it's coming from.
Yeah, I think it's really interesting you make that dividend point. I'd point out to the companies that are being punished for pulling their dividend or not being able to deliver on their dividend, because on the flip side, you're also seeing some of that, right?
Yeah.
Let's talk about Amazon, though, also. We saw some focus on cost cutting there also, and that very much delivering results too.
Yeah, and I think, and I should mention that you mentioned the cost-cutting story. Meta, of course, had a big one as well. Yeah. Apple has been talking about this as well. This has been a big theme on Silicon Valley. In just the last couple of months, 20,000 workers have been laid off. That is a massive number in general, but an extra massive number in Silicon Valley, where the talent pool is already so tight. The labor demand is extra there. When it comes to Amazon, a couple of stories here, because again, Amazon, like Apple, does a million different things. In terms of consumer, in terms of e-commerce, they were able to come back up because they did have that dip in the last 2 quarters for Amazon as well. So you did see this pain in the consumption story. You also had a pain in their kind of logistics story as well. Remember, Amazon has their own logistics network, and the spillover that Amazon Logistics can't carry, they outsource to UPS. So the fact that they were had to pay extra wages to their delivery workers, the fact that they had more delays, that's a real issue. If you'll remember, back in the day when the Ever Given was stuck in the Suez Canal, Amazon was one of the initial people that were affected. We're now waiting for the read-through of the Red Sea in particular and how that's affected as well, simply because they have this network that is truly global. So that is one part of the question. Look at consumption has been great. The other piece is their Amazon Web Services business. The new CEO, Andy Jassy, who of course succeeded Jeff Bezos, has been very vocal about moving the shift of Amazon away from the e-commerce business and more into AWS, because that's where the growth is. But remember, we just got Microsoft earnings this week, where they're, of course, the major player in cloud services, and they're also the ones that were seen as most capable of taking on the AI story because that cloud infrastructure is already built in a way that, for example, Alphabet can't do because their cloud infrastructure isn't as built. Who's the major competitor for Microsoft? It's Amazon Web Services when it comes to the cloud business. So if you actually look at some of the analyst commentary there, AWS isn't diving into AI as aggressively. They do have a startup that they've invested in, but it's not the same momentum you're seeing behind it. They are still talking about having to grow that part of the business. And right now, investors are still looking at the fact that the e-commerce business is outperforming the AWS business. But in the long term, that AI story matters more for Amazon because it's a great indicator of how a company that isn't your Microsoft or isn't your Apple and isn't really prepared for an AI story can actually commercialize it.
Okay, tie this all together for us from everything we've seen this week. What conclusions can we draw, or what themes can we draw from the Magnificent Seven reporting?
Well, I think a lot of people look at the Magnificent Seven as some sort of defensive trade. It's why the conversation of breadth comes up a lot, that, these 7 stocks are the ones that are carrying the S&P 500, therefore it's not indicative of the actual gains in the United States economy. I'm going to push back against that, because if you look at the themes in every single earnings story, even just today, Apple, Meta, Amazon, you have seen that it's resilience across the board. Resilience in the consumer, resilience in business investment. That is a really big piece of the equation that a lot of people don't talk about. A lot of their revenue from all of the tech companies comes from businesses that are investing based on how they're viewing the consumer. So it's kind of a frame story a little bit, but I think the takeaway here is resilience matters, and that's why a lot of these investors are able to justify these massive valuations for these tech companies, because they're saying, look, the growth is there. It's expensive to be exposed to it, but the growth is there and we still want a part of it.
Okay, Kriti, really great to have you on the programme this morning. Bloomberg's Kriti Gupta then taking us through, all the earnings that we've seen from the big US tech names.
Now, the Bank of England Governor Andrew Bailey has told Bloomberg there are still hurdles on the path to rate cuts. He pointed to risks from turmoil in the Middle East and wage pressures. Bailey's been speaking to Bloomberg's editor-at-large, Francine Lacqua, after the bank held interest rates steady. She asked the governor when the bank will know how inflation has gone down by enough.
I think we've now changed the question, really, from how restrictive do we need to be, for how long do we need to be restrictive? That's important. We've also taken the upside bias off. We have included a risk, by the way, a new risk actually, which is really reflecting obviously sort of tragic events in the Middle East and the impact that can have through the Red Sea effects. So I think now the question is, for us, is really for how long do we need to maintain this stance going forwards? As I've said a number of times, we're not making predictions at this point. We're setting up the framework. The things that we think are important to look at really haven't changed, actually. So services inflation, aspects of the labour market, the domestic drivers of inflation. Because these global shocks, I think we're now seeing the disinflation side of the global shocks.
But Governor, is there a specific, is it wage growth? Is there something specific in the set of numbers that you look at that will give you the impetus to cut?
Well, I think a number of things. I mean, services inflation, it's still at 6.4%, so it's still, well above anything that's, I would say, is consistent with us consistently meeting the target, first of all. I think with wage growth, we have seen the official measure come down. It's below where we thought it would be. Open question really as to whether that was a sort of bit of an adjustment of some anomalies in that index, or whether that's really is a move. But it doesn't. It's now in line with the other things we look at. Again, they're above, frankly, levels that are consistent with hitting the target. But I think the important thing there is to say, look, inflation has come down a long way, headline inflation. We think it's going to come down further in the short run.
Is that thanks to the Bank of England policy?
Well, I think, two things there. First of all, I think the major driver of that is the disinflation side of the global shocks. What Bank of England policy has done, and I've been saying this some time, I think, is to prevent it becoming domestically embedded, tend to call the second round effects. That's what, and we always said that's what we can do. We can't stop global shocks. Obviously we all wish we could stop wars, but we can't in that sense through monetary policy. So our job is to stop it becoming embedded.
Governor, so Jay Powell yesterday pushed back against expectations for a March rate cut. Markets are pricing in some kind of cut in May or June. Is that fair?
Well, I think markets, I think, are responding to the fact, again, that we've now set out, in a sense, our framework and said, the question for us is for how long. I think markets are coming up with their own answer to that, which of course they will, and that's quite reasonable. Our forecast, of course, is conditioned on their view, but it's not our only judgment, and we will decide now meeting by meeting.
Governor, why are you so afraid of actually committing to a cut next time? Is it because you're worried about inflation coming back? Are you worried about, the budget that's coming up in March, or are you worried about having to reverse course?
Well, there are really two reasons, actually. One was the evidence. We always want to see the evidence, and the world is. And the second is the world is still a fairly uncertain place. There are still things going on in the world which, I would say, are not the normal course of events in the world and can have quite big effects. And so we want to see how these influence, the evidence that is vital to us.
Like an insurance policy.
It's a question really of being too soon to conclude that we're on that sustained path to target. But I hope we'll be there, for long.
Do you think that the UK was in a recession in the last couple of months of 2023?
Well, we don't have a recession in the forecast we've published today. Frankly, it's in the balance, I think, because you can have small margins either way. We don't actually have a recession, and I think I would just emphasise perhaps a point that's even more important. I think there are clear signs with the indicators in the UK that we've seen some pickup in indicators really around the turn of the year and going through January. So I think that's a positive signal, and that's why it helps to explain why in our projections, our forecast, we've actually got a gradual pickup in growth.
But it's quite difficult to explain to someone who needs to decide whether to remortgage or not, given everything seems to be really hanging on a balance. How would you describe the economy?
Well, I think we are seeing still subdued growth, but we're seeing some signs of a pickup in activity. I think we've actually stronger, and I'm pleased about this, than we expected, household real incomes. Unemployment has not risen as we thought it would. That's good news, obviously, as well. And those things are, now being reflected through into what we see as a gradual pickup in economic activity going forwards.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.